Investing in commodities and mining usually it's a cyclical game where ups and downs are the norm. But what happens when a company decides to break that pattern and put the shareholder at the center of its strategy? Today we're speaking with a company that balances growth and dividends, always putting the inversion first. Are you staying to listen? Welcome, mining lovers. This is Charlano de Minas, the Spanish podcast dedicated to mining investment. Now, in English. Do you want to learn? Subscribe. Do you want more content in English? Leave us a comment. The episode is about to start. Welcome to Charlando de Minas, the only Spanish podcast dedicated to mining and commodity investment. Today, in English. This is a translation from the original audio in Spanish. If you are a Spanish speaker, you can find the original conversation in the description of this video. Today, we bring you an update from a company that visited us last year. We have with us one of the most reliable copper producers in the public market. Welcome back, Aurora Davidson from Amerigo Resources. How are you, Aurora?
Amadou, thank you very much for inviting us again to Charlando de Minas. It is a pleasure to be here and to be able to talk to you.
I am especially happy to have today Aurora because she recently sent me a message saying that she had become a follower of the show. So, first of all, thank you for listening to us and for coming back to the podcast. For those who didn't catch up in our previous conversation or are unfamiliar with Amerigo Resources, the company operates in Chile through its subsidiary Minera Valle Central under a long-term agreement with Codelco's El Teniente division, the world's largest underground copper mine. What sets Amerigo apart is its ability to generate value from mining waste while maintaining a resilient business model that mitigates traditional mining risks. Additionally, the company has a strong commitment to shareholder returns, implementing a consistent dividend policy and a share buybacks. Amerigo Resources is listed on the Toronto Stock Exchange under the ticket ARG.TO. If you had missed our previous conversation last year, we'll have the link or the video in the description. Aurora, it's been an eventful year for Amerigo. You have left behind the water-related problems and returned to producing around 64 million pounds of copper. With copper prices remaining strong, you have also been able to focus on one of your key priorities, shareholder returns. Tell us about your overall experience over the last year.
As you may know, Amadeo, 2024 was an extremely normalized year for us because, unfortunately, we had lived through the biggest floods in Chile in 2023, and I think that was what we discussed a time ago in our first talk. However, within that normalization of conditions, from my point of view, we had an excellent operating performance at MBC. As we indicated in due time in the announcements that we make to the market, MBC exceeded our annual production and cash cost guidance. Our team has clearly internalized the main operational objectives that we have within the company, which are to produce copper and financial margins without accidents or environmental incidents. As a good example of the operational excellence with which MBC worked, I would like to mention that we had 97% of the availability of the concentrator plant. We also achieved 3 consecutive years of operations without lost time accidents, and we continue to implement risk mitigation projects. It is not that we are trying to optimize everything, but we do want to concentrate on working with the variables that can have the greatest impact. Concretely speaking, last year we had a production of 64.6 million pounds of copper, and we also produced 1.3 million pounds of molybdenum, which is our byproduct, with an annual cash cost of 89. and the average copper price of the London market of the LME went up 8% to an average of $4.15 a pound. So it was a year with a good accompaniment of the copper price, and this led us to generate an operating cash flow of $47.1 million US. But in order not to sound repetitive, when I talk about dollars, they're always going to be US dollars unless I tell you otherwise.
The numbers are impressive, and we will go through some of the key figures during the interview. But before diving into operational details, I would like to focus on the shareholder returns, which I believe is one of the Amerigo's main strengths. Last year, in addition of your regular 12 cents per share dividend, you also issued an extraordinary dividend of 4 cents per share, bringing to the total of 16 cents per share. Given that Amerigo stock traded between 1.28 and 2.05 Canadian dollars during the year, they represent an approximately yield of 7.5 to 12, depending on when the shares were purchased. To put you in perspective, Rio Tinto offers an annual dividend yield of around 5.5%, meaning that Amerigo has been delivering almost the double the return of an industry giant. It is a very important return in terms of dividend, right?
Yes, it is. And I think it is worthwhile for us to talk about it to explain what happened here. Look, Amerigo has had since October 2021 a capital return strategy. We are abbreviating it as CRS for capital return strategy. And in effect, the CRS is a very distinctive element of Amerigo. Within the strategy, we have 3 shareholder return tools that were very well thought out because in the copper market there will always be cyclicality, and we wanted to have tools that would give us, on the one hand, certainty and predictability, and on the other hand, flexibility. So we ended up designing 3 tools. One of them is the quarterly dividend that we are currently paying 3 Canadian cents per share. Here they are Canadian. We have an additional dividend that debuted in 2024 with a payment per share of 4 Canadian cents, and we have share buybacks. So to summarize the quarterly dividend, the additional dividend, and share repurchase, since we started with CRS at the end of 2021, we've returned $78 million to shareholders, and the pie has been split 67% as dividends and 33% in the share buyback. And if you have been a shareholder of Amerigo since October 2021, you have received up to today, March 5th, when we are recording the interview, 42 Canadian cents in dividends in a period in which the average price of copper has been $4.03. And I mentioned what the average copper price has been in the period so that we don't think that, well, it was a period of exorbitantly high prices. 403 has been 42 Canadian cents to date. Just a few weeks ago, we were calculating what the adjusted total return has been. That is your dividend and your appreciation in the Amerigo share price since the CRS began. And it's a 91% return in this period that you left behind because we said, okay, this 91% jumped out at us, or let's see what's happened to other mid-sized copper producers, what's happened to ETFs, what's happened to copper, and we've beaten them all to the punch with that 91% return. I'm going to be talking about it a lot this year in our various shareholder engagements.
Okay, Aurora, let me point something out. You mentioned the year 2021, right? Back then, the stock was trading below 1 Canadian dollar. This means that investors who bought in 2021, just from the dividends alone, have already doubled the initial investment and achieved full return.
That's right. And I think it's a very interesting part of our story. The numbers do not lie. I mean, I can talk to you here for 2 hours about what the shareholder return strategy is. That is why for us this year, we are going to be working hard to tell that story through our webpage, through media such as yours, through videos, to show what has happened. because we do not feel that this is ending. We feel that we are really beginning in the stage of strong appreciation of the price of copper.
Do you see the extraordinary dividend becoming more of a regular occurrence rather than a one-off event?
The truth is that we in Amerigo do not call it an extraordinary dividend. In English, we call it a performance dividend. And then we translate it as a performance dividend, and we say that performance is the copper price. So if copper performs well, if copper has a good performance, this is the copper performance dividend. What we saw in 2024, which was our first performance dividend, was with an average price for the year of 415. That is what triggered the performance dividend. And if we had not had the copper price volatility that we saw in the fourth quarter, and then we can discuss it a little bit more in detail, we would have paid last year 2 yield dividends. We ran into that volatility. When the market thinks about Amerigo's yield dividend, I would like them to think about the fact that we have flexibility in everything, flexibility in the amount, how periodically we can declare it, etc. So there is no pattern to follow with that dividend. Everybody wants to pigeonhole me and say, well, it is half, it is double. If you gave 15 days before the regulation, no, flexibility, 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 flexibility. This dividend has a completely different DNA than the quarterly dividend, which is a very, very, well, as they say in Chile, it's very boring. It is regular in everything, isn't it? So they are two different animals. And in periods of high copper prices, the dividend yield takes on a predominant role.
Since 2021, Amerigo has repurchased over 20 million of shares, even with a relatively high share price last year. You continue with the buybacks. Does management intend to maintain this pace of repurchases?
Yeah, look, we have indicated to the market that every year we will repurchase shares, at least to buy the number of shares that have been issued. In our case, we issue shares when options are exercised, so that annually the shareholder does not have dilutions. That is the minimum commitment. And beyond this minimum annual purchase, the repurchase activity depends on the additional cash that has been generated, on the share price, and also on the reading that we make at the time at board level to determine how much to allocate to the repurchase, how much to allocate to the dividend yield, and in what timing to do it, what to do first, because one can affect the other. There is factors to consider, and this is changeable. So we indicate that the board has full flexibility to work with the two additional distributions, the buyback and the dividend yield. What else can I tell you here? Well, we have not yet seen an Amerigo share price where we say, hey, it doesn't make sense to do buybacks anymore. That's very important. To insist that repurchase activity does not imply that there is no yield dividend and vice versa. You can have both, and you can have both at the same time.
The board currently holds 7.7 million of options. What are the plans for the capital being generated?
Look, the Amerigo incentive option plan has a clause to exercise options in cashless mode, that is, without cash. You don't have to exercise them cashless, but you can exercise them that way. Without this clause, what would happen is that when exercising options, for example, I would have to use, to give you an example, pay Amerigo the cash of the strike price to buy my options, and also pay him, according to Canadian tax regulations, the taxes corresponding to that gain, even if I decide to keep the physical share. So let me give you a specific example. Let's talk about 100,000 options with a strike of $1 at a market price of 80. So I would have to come in, pay Amerigo 100,000 Canadian dollars and approximately 20,000 Canadian dollars of taxes that Amerigo remits on my behalf. So if I don't have the $120,000 saved in the account or in the drawer, what happens? I have to immediately sell 66,667 shares and keep only a part of it. In the cashless process, the way it works, is that an adjustment is made to avoid cash flow, and Amerigo issues me shares for the net amount of cash, for the net amount of the gain minus taxes. So, in other words, he issues me 33,333 shares. So there, in this specific example, the actual issuance of the share is 1/3 of the large number that you see there of 7.7 million. Okay, and this has three very interesting advantages. One, it reduces the number of shares that are issued, which we want to buy back later anyway. It does not affect the market because you do not have suddenly there an incidence of additional supply in rush mode from people who need to sell quickly to get their cash back, and you have an incentive to hold on to the shares for the long term. That's how I have done my stock position in Amerigo, and how other people in Amerigo have done it as well. So if you have shareholder managers, you're well aligned. You didn't issue a lot of shares. The company doesn't need that cash. It's a very interesting way of rewarding and aligning interests without generating an overissuance of shares.
Since we are discussing shareholder distribution, could you give us some insight into Amerigo's current ownership structure?
Yes, not much has changed from what we talked about last year. We have internal shareholders, institutional shareholders, and retail investors. Most of our shareholders are located in Canada, in the United States, in Europe. In the last 3 years, we have had a large influx of European shareholders, and most of it is a combination of internal and institutional.
What do your investors value more, share buybacks or extraordinary dividends? Tell us the feedback.
Look, we talk about the numbers that they have received as returns, so the shareholders are happy with the return to capital strategy. But in the beginning, there were two teams that were more fanatical. There was the team on this side of the court, the pro-dividend side, and on the other side of the court, the pro-stock buyback side. And then they were vocal and very emphatic in their opinions towards us, because we are always listening to the shareholder of this is better for us, or this has more value for us. But over time, those tendencies have softened. I think because we have shown that you can have both. You can have the dividend trend and the buybacks. When we started out heavily with buybacks, and for the first 2 years of the return to capital strategy, we were pretty much at a 50-50 split on buybacks and dividends. And at that point, we're at 67% in dividends and 33% in buybacks. I will tell you that normally we might be at 60 dividends, 40 repurchases, but do not take it as a concrete crystallized number because it changes. But one of the arguments, for example, institutional, is that they prefer to buy back shares because they are not taxed. So they are computing their gain, which is a gain that is no longer crystallized. It is an unrealized gain because they have a bigger portion of the foot of Amerigo's foot without having had to cover taxes, right? But for other investors, as they say, cash is king, and many people love to receive their quarterly dividend check, and especially the additional dividend yield check that is undated. So both trends are important, and the important thing here is that one doesn't eliminate the other, right?
Yeah. I sometimes get the impression that there are two distinct camps among investors, those who prefer dividends and those who favor buybacks. These groups don't always see eye to eye. How do you balance both perspectives within your strategy?
No, the success of the strategy is that you have all three, and there the distribution is moldable from one year to the next. But as a whole, it has worked very well to have the three legs of the strategy.
In another interview, I heard that you mentioned a cash threshold needed before considering any additional returns to shareholders. I can't recall if it was 20 million or 25 million, but the idea was that financial cushion is necessary before initiating any extraordinary distribution. Is that still the case?
Look, the consolidated cash level, and I think this is a point that we wanted to communicate very clearly because it was a question that we constantly received. Well, at what level do you feel comfortable to distribute more? And that minimum cash level or ideal cash, whatever you want to call it, in a recent interview, I'm sure it was the one you heard, I said 35 because I got it wrong. I meant to say 25, I said 35, and then I said I can't. I apologize for that, but the target figure is 25, considering also the punctual behavior of the copper price. Here I tell you, for example, what happened in December. I can tell you right now on the other screen, I have the consolidated cash position of the company. It is exactly how much we have in cash every day, almost, right? So we knew that we were going to end December of the 44th year, which is a reporting period to the market with more than 25 million in cash. But also that we had seen that the copper price had dropped from 433 in October to 412 in November to 405 in December. Trump was about to come in. There was this whole issue of the tariffs talk. I in the back. So, as the saying goes, don't leave port if the clouds don't run with the wind. So we did not feel the confidence to say, even though I had the cash, I am doing something else with that money right now. Why? Because the outlook was a bit cloudy. So if there is copper price volatility, we are going to be more cautious because we are, by definition, a conservative and cautious company. In this December example, even with the cash flow above the target, we decided to be cautious. Above target, we did decide to make our goal of buying the necessary shares to avoid annual dilution, but we have to pay it. We do not consider it prudent to do any more share buybacks, nor to pay an early dividend, even if the cash would have allowed it. So I do sound a note of caution. Cash is important, but you also have to look at it more holistically in terms of, well, what is the business outlook? What is the copper price that we are looking at the time?
Do you think that some investors might argue that holding 25 million in cash is excessive?
Well, you have to have operating cash. You have to have an operating cash flow. In the case of Amerigo's business, we sell our copper at 3 months of, we have a 3-month exposure on the copper price. What I sell to you in December, I receive a provisional payment at the December price, but the settlement, the final adjustment, is made with the average price of March. So I'm always going to have that 3-month exposure in which I may have to pay back the copper price differential. The copper price differential from my provisional to the final price to Codelco. The same thing happens to me with molybdenum. I receive a provisional molybdenum price. My molybdenum sales in many cases are at M+4 or M+5. So I have 5 months of volatility exposure of, in this case, over 500,000 pounds of molybdenum. So those are special points. So you've got bills to pay, you've got taxes to pay, and you don't want to always just be left with nothing but your wallet too. You go to the supermarket that day and that's it, right? You have to keep it safe. Now you have a line of credit, I agree, but maybe you don't want to tap your line of credit. I think it is just a question of treasury planning here, yes, to have covered at least 2 dividends your exposure of your M+3 or your M+5 of the moly copper. So the calculation is not arbitrary. It is a calculation that is required to have that certainty that you are not stuck against the wall in terms of your JLA demo.
I think your explanation is very clear and convincing, especially when you mention the need to hold enough cash to cover 3, 4, or even 5 months of operations. That include maintaining visibility, covering 2 dividend payments, and having the flexibility to manage price fluctuations. It's a very rational approach and aligns perfectly with the company conservative philosophy. I remember the last year that we will talk about your
That's
goal
right.
to become debt free by the end of the year. Is that plan still on track?
Look, we ended 2024 with 11.5 million in debt, out of an original debt of 100 million that we incurred to do the production expansion at Minera Bahia Central. According to our repayment schedule, we have to pay this year 8 million, and we would have 3.5 million left to pay in June 26, which is not worth leaving hanging there on the balance sheet. So we want to prepay that last payment of 3.5 million and finish 2025 with no debt on the balance sheet.
Perfect. Then I understand that you will also see this debt prepayment as a shareholder return action, right?
It is an action that eliminates the difference between free cash flow and free cash flow to equity. So practically what you are doing there is you are accelerating the payment to your banker. Accelerating the payment to your banker so that everything that is generated later as free cash flow remains directly as free cash flow to the shareholder.
Yes, absolutely. I see it this way. When the company is debt free, shareholders benefit from a much stronger cash position. And that brings us to the next point. Less debt means more free cash flow, which in turn means more cash available to deliver value to your shareholders. Would you agree?
Of course, when we eliminate the debt this year, other things being equal, we will be releasing approximately 9 million per year in normalized terms of cash that we were allocating to amortize liabilities and cover financial charges. So there, as of 2026, we can practically add 9 million without changing anything else in the variables to the projected free cash flow of return to shareholders.
Perfect. Look at the Amerigo stock performance is held up very well. Since COVID lows, the stock has been approximately revaluation over 75%, and that not even counting dividends. There were multiple opportunities to enter around $1 mark during this period. If we will go back further, since 2001, the return from the dividends alone will represent over 100%. That said, some of my colleagues argue that Amerigo growth potential is limited or even not existent. And to be fair, they have a point because in your own presentations, you have stated that the company doesn't aim for aggressive growth, but instead focus on maintaining a stable business model and delivering shareholder returns. How will you respond to investors who hold that perception of Amerigo, and how you will convince them of the value of your strategy?
Look, I like the questions you ask because they are very insightful. There are many layers of argument within this question. The argument that Amerigo is not a company with growth plans is very common, but I would tell you it's wrong. It's so common that I addressed it in 4 videos that are on our website and on our YouTube channel, and we even call them that series of videos Growth Redefined, the redefinition of growth. The main premise is that everybody thinks that growth means producing more. Larger per tonnage produced is your only growth metric. But producing more tons doesn't mean that you, as a shareholder, are going to be better off. There are many risks that have to be solved, and you explore them a lot in your program. Permitting time, construction time, financing time. Materializing production growth does not always happen, and even if you reach your goals and produce more, you may achieve it after having multiplied 2 or 3 times your initial capex investment. And you as a shareholder, you're going to get to that point of higher production or higher tonnage of production having been diluted by the issuance of equity that the company by the equity issuance that the company had to face to pay for its expansion, or you're going to be standing after the banks because increasing production often requires issuing equity and issuing debt. It is an activity that costs a lot of money. So our invitation to the shareholder who is questioning this risk position is to redefine what is growth, not as growth in production, but as growth in the return on the capital that has been invested. And we've talked about different metrics here that you mentioned yourself. Well, if you had invested before COVID in Amerigo, you have an appreciation of 475%, 475%. What we want to show is what can happen if you have a share of Amerigo that pays dividends like a machine versus if you have a stock of a company that is constantly in growth mode. And in these videos that we did, especially in video 1 and 2, we even went into a very granular detail and presented an Excel sheet that is on our website that explains this in detail. Amadeo's reality is that good capital allocation policies do not necessarily make a company grow. That there is no point in growing if the returns that come from that growth in capacity or production are going to be bad. But few companies have the strength to stay at the size at which they are operating well, because there are so many external pressures. There are external pressures to grow from peers that are looking for M&A, promoters, short-term shareholders. So a lot of times companies that are looking for growth are also growth because they are not performing well. In other words, there is something that is not working well within their current structure, and they are looking for a way out. Or frankly speaking, they have an inadequate incentive system where management has to close a merger or buy a project, whether good or bad, to achieve their bonus. Or else FOMO appears, and it is not easy to resist the temptation to grow, even when the economic results do not look good. I would say that there are few companies that stay focused on what they know how to do and that are truly compounding machines. I love that word, that phrase, compounding machine, a compounding machine. There are few companies that work on avoiding disruptions in that compounding process. That organizational niche is where that's what we look for in Amerigo, for the benefit of our relationship with the lieutenant, for the benefit of our employees, and for the benefit of our shareholders. So it is maybe a little bit counterintuitive approach. I don't grow to grow, if you want to look at it that way.
So this has been very clear to me, and I think that it aligns perfectly with the company philosophy. Still thinking along these lines, I have been exploring a few ideas, and I would like to know whether they are accurate or if there is something that you might consider in the future. For example, is there any possibility of increasing production? So in your production graphs, I saw in the past you reached nearly 70 million pounds. So even though you have mentioned that you're currently operating at 97% capacity, very close to the limit, I wonder if there is room for some more kind of expansion or perhaps a parallel facility to process more mineral. Is that something you have considered? Could it be part of your future plans, or are you more comfortable with the current scale and see no need for expansion?
Look, that example of the one in the question, we were looking at a minute ago. In the year of the pandemic, we did produce about 70 million pounds, as you mentioned, but included in that production was the processing of a short-term contract, a little bit of a short-term contract, a little bit of a short-term contract, a little bit of a short-term contract, a short-term contract, a little more than a year, for the processing of slag from the Teniente. And that slag processing contract gave us a contribution of almost 12 million pounds of production. So wonderful year, 12 million of additional production. The financial margin from processing that slag was not significant, and in fact, it was a very strong distraction. And this is a perfect example of how the effect of production growth in a short period can have no impact on the bottom line. If you take that ancillary contract out of the slag processing, we produced 58.2 million pounds in the pandemic, which is 10% less than we produced in the pandemic. So our production that we live off of, that MBC lives off of, that generates a margin, was 10% less because we were distracted in putting in a top-line revenue of 12 million pounds. Now, at MBC, we are already processing 100% of the tailings sent to us by the Teniente. If you were to tell me you can grow because you are not processing, you do not have the capacity to process all the fresh tailings from the Teniente, then I would say, yes, I have a growth opportunity and I am incurring an opportunity cost for not processing that tailings that brings copper. So I would take it as valid, but I am already processing 100% of that fresh tailings, which is what I am interested in processing as a first source, because we saw it in the last interview. If I don't process it, I'm letting that tailings go through MBC, leave and go through MBC, go away, and not recover that copper for the company. Our second layer of processing to cover our full processing capacity in the plant is the historical tailings. If I don't process them today, I process them tomorrow. If I don't process them tomorrow, I process them the day after. But they are there and I'm going to process them all. That is, I'm not stopping processing them. And to make an investment of $50–60 million to increase, to have one more mill or additional flotation cells to make an accelerated processing of the historical tailings is not worth it, because it is no longer economical. So within the current plan that we have, of full utilization in the plant, giving priority to fresh tailings, introducing historical tailings so that there is no idle capacity in the plant, we are getting the best return on the capital invested, and we are not trying to make the equivalent of a full utilization plan. And we are not trying to do the equivalent of high grading, which would be to process all the historical tailings that can be processed now. But we also have another aspect to take care of, which is remember that we have the Teniente mine, a tailings channel that arrives at our plant, and then another tailings channel that leaves the MBC plant to the permanent tailings deposit at Teniente. Plant to the permanent tailings deposit at Teniente. So there are transportation capacities within that channel that are also being taken care of and respected in order not to create because it is not infinite. So within the existing infrastructure that connects us with the plant, that connects us with the tailings deposit, with the mine, and with the tailings deposit, and within our own plant, there is a perfect use of capital and infrastructure.
Great. Then, based on your previous answer, another question that came to my mind: would it be feasible to replicate your model at another Codelco's mine, following a similar type of partnership to operate more than one facility? Or is this particular arrangement so unique to El Teniente that it would be difficult to reproduce the business model elsewhere?
What makes the Teniente case very interesting is the volume, the actual day-to-day processing volume of fresh tailings. El Teniente is Codelco's most important production, but it has other smaller mines that also obviously produce tailings. There are other mines in Chile beyond Codelco that also have tailings, that have large volumes of tailings, even greater volumes of daily processing tonnage than El Teniente. Everything can be replicated. The interesting thing here is to find the interest of the counterpart to do it. We are interested. Obviously, we are experts in the processing of copper tailings. We are experts in what is an operation of this level in Chile. So I believe that there are very interesting opportunities, and I believe that to the extent that the price of copper encourages the owners of the tailings to see their tailings as an additional source of income, we are the partner par excellence that can carry out a successful operation together with them. Until then, what has happened is that if you ask any mining engineer what tailings are, they say an environmental liability. It is the residue of the process. I am not interested in seeing it. I prefer to be exploring in new ore deposit areas. It is not the logical outcome that the typical miner sees. El Teniente was at the forefront in seeing this 32 years ago, and hopefully with the right copper price incentive, other similar opportunities will be seen. Is supported by the success and operating resume that MBC has for 32 years. In other words, any other company that tells you that it has successfully operated a copper tailings operation for 32 years does not exist except Minera Bahia Central.
Thanks. Another question that came to my mind, that now that you will be without debt, and obviously with all your shareholder return strategy, you will be generating a very important cash flow. Have you considered maybe at any time to act as a royalty or a finance of some kind of mining operations in Chile?
It also ties in with the previous question that we covered. Look, our operating expertise is in copper production from tailings. If there were similar opportunities under that investment criterion, copper tailings production with a stake in the business, we are interested in providing that expertise with a financial return in between. We know how to produce copper, we know how to produce the margin, and especially in Chile, which is a country where we are very interested in continuing working, but working as a capital incubator for exploration or traditional mining projects in Chile or outside Chile is not something we are considering doing.
Perfect. In 2024, the all-include sustaining cost went down respect to 2023. This is only because you have been able to operate at 97% of your total, or is that you have become more efficient?
What is happening here are several factors. All these costs, the cash cost, the total cost, the all-inclusive sustaining cost, are reflected or reported in communities per pound produced. And remember that in 2023, we produced 10% less than normal due to the rains in Chile. So there is an important factor. But we have also been managing our costs quite well in the TCRCs, which are an important part of the cash cost. They went down even more in the end. And there is the issue of the behavior of the Chilean peso, which is the currency in which we incur many of the costs in Chile, and its relationship with the US dollar, which is the currency in which we report. So those factors are the ones that have caused the cost to vary. But for example, if we look at our cash cost, we have fixed cost elements and variable elements within the cash cost. For example, in the cash cost, the fixed is an important component. The energy cost is fixed. The TSRCs are fundamentally fixed. The labor, maintenance, operation of the historical tailings, the prices of our important inputs are fixed annually. The price of grinding media, of reagents, the cost of administration and transportation, the cost of administration and transportation, the cost of the TSRCs, and the cost of the tailings. On the cost of administration and transportation, and many of the direct costs are fixed. And as variable issues associated with production levels, we have an energy cost component, the consumption of grinding media, reagents are variable, the moly credit, which is reported as a reduction of the cash cost, so the moly price is variable. But the factor of the exchange rate of the Chilean peso against the dollar is important. It has a significant sensitivity. That would be the cash cost. The important factor to go from cash cost to total cost, we add the royalty to the teniente. The royalties to the teniente vary from the copper price. They are associated to production levels and copper price levels. Depreciation, I would like everyone to remove depreciation from the quantification of the total cost because it is rather distracting. And then in the moly, even the sustaining cost, we have there the sustaining cappings, which in general will be stable from year to year, but it is also incurred in Chilean pesos, so the exchange rate factor changes. And the factor of the last component of the moly is even the head office cost, which is stable. It does not vary much, but it is incurred in Canadian dollars, which unfortunately is also having a lot of variability against the US dollar.
Regarding investment, many of the investment that you made in the recent years have been to mitigate risk, to mitigate energy risk, to mitigate climate risk. I remember the last interview that thanks to these investments, you were able to cope quite well with the floats and have the facilities down as little as possible. This year, 2024, have you made or taken any similar action? And there is any kind of investment of this type planned for 2025?
We have continued under the same line. I think that when we had the interview in the year of the year, we had just put online, but it was a project of the year, a high voltage transformer as standby. Other works that we did in the year, we built a water containment dam at the Coconés Dam to help us stop rain in sectors, and we began the purchase of a number of additional pumps to evacuate rain from the dam in case of flooding. This year we are concluding in these months. We want to be ready before the rainy season begins, the installation of these additional pumps, so we are well prepared. We are well prepared to face other climatological risks that could occur. We are well prepared in case we have some kind of problem with the power transformer. And in general, it is to continue to do the risk sweep and see what investments are required. We work a lot with risk matrices to identify future headaches early and take the aspirin before it becomes a microneedle.
One question that came to my mind with your answer, where do you get the energy from? How do you do it?
We have a long-term power supply contract. It has the same term as our current contract with El Teniente, that of the year. All the energy we receive is hydroelectric. So it is certified green energy in Chile with one of the most important suppliers in Chile.
I was thinking about that just to have another option, to have it cheaper, the energy, or to have it greener. But I could see that as expected, you have everything under control.
Chile. In fact, one of the important parts of our power supply contract is that we have a fixed tariff only with annual escalation based on the US CPI. So it is practically an inflationary. But part of the contract are what are called transfer charges to large consumers in Chile. And there we have all been penalized. We have to say things as they are for the lack of reliability. How do you say? The lack of reliability of green energy sources in Chile. So windmill energy, solar energy does not always end up supplying what it has to supply. The grid has to come in to cover, and there is an implicit penalty for that transition that everyone would like to work better and have a higher success rate, but it does not, and everything has a cost. Everything that does not work has a cost, and someone has to pay that cost. So the indirect costs through these pass-through charges we are paying to some of us who have green power contracts.
So we have been talking about Amerigo for almost an hour now, covering your results, shareholder results, and overall strategy. I think that we have touched on all the key areas of what you have achieved and what we can expect going forward. To wrap the things up, Aurora, what can a shareholder who invests today expect between now and the next time that we speak again?
What possible can a shareholder expect? The shareholder should, in my opinion, expect to be a shareholder of a company that has been built to be a long-term company. I can tell that we have a long-term relationship with El Teniente Mine, and El Teniente Mine is a long-term mine by definition. It is a mine that has more than 80 years of production in front of them. in the years of the 20s and 24 to summarize what can be generated in Amerigo. With a price of $4.15, we generated $47.1 million. People who are investing in the sector have their own vision of where the copper price is going to go and can make this extrapolation of whether with $4.15 we produced 47.1. On our website, you can see other copper price levels, which is what we are indicating as guidance to the market for this year. As an organization, we have years of implementing the company's resources to obtain the best a possible return to the shareholder, and with a very clear focus on maximizing long-term shareholder value. We can assure that we are not here to make a short-term performance and then retire to other projects. We are invested here for the long term, and we offer that long-term management vision to investors in a different business that has a lot of upside and maintains full exposure to the copper price.
Thanks, Aurora.
Thank you, Amadeo, for the interview. Let's hope to see you soon, at least next year.
Disclaimer. The content in Charlando de Minas is not an investment advice. Amadeo Bonet and his guests are not investment advisors. The authors may have interest in the companies mentioned in this publication. They may also have bias and not be impartial. The information in this publication and all the others in Charlando de Minas is impersonal by nature and should be considered as an entertainment product. The minimum risk of any investment mentioned in this video is 100% of the capital. Before to make any investment decision, contact to a financial or investment advisor or someone qualified with experience. These broadcasts are a narrative of my learnings in the world of commodities and mining investment. In this podcast, we will try to bring experts, professionals, and companies. If you like it, please subscribe. I am Amel Bonet. Welcome to Charlando de Minas.